The coffee sector is still facing supply chain disruptions due to US tariffs. Green coffee from Brazil and roasted coffee from Switzerland are particularly hit the most. American consumers have largely yet to see the tariff impact. However, EU coffee roasters are reconsidering their strategy as the trade flow shifts. Take a look at this next report for more details on this.
The coffee industry continues to experience significant disruptions. This is due to a series of tariffs imposed on key coffee-producing and exporting nations. Brazil, the top-ranked exporter of coffee to the US, faces a 50% tariff. Third-ranked Switzerland is subject to 39% taxes. Currently, both countries are actively negotiating with the US to ease these trade barriers. However, the current situation places Brazilian and Swiss exporters at a marked disadvantage. In contrast, other coffee-producing nations such as Colombia and several Central American countries face a comparatively modest 10% tariff. That gives them a competitive edge in the American market. Latest data reflects the shift in trade flows. Coffee exports from Brazil to the US dropped by over 75% in August compared to 2024 levels. Reason: Brazilian traders hold on to stocks and farmers delay sales in anticipation of higher prices. In contrast, exports from Colombia and Vietnam remained stable through September. As a result, American coffee supplies are tightening. The disparity in tariff rates is expected to drive US buyers to reallocate sourcing away from Brazil towards more favorably taxed countries. That was also reflected in a steep cut in Swiss coffee exports to the US, while Italian exports proved more stable. At the consumer end, rising coffee prices have been making headlines globally. On both sides of the Atlantic, supplies are strained due to consecutive bad harvests in key coffee-growing countries. Consumer price indices for coffee are up by 20% in the EU, the US and Canada. However, for US coffee consumers, the worst tariff hit is yet to come. Up until July, prices in the EU and Canada went up at a much faster rate compared to the US. But that picture is starting to shift. In the States, high-tariff coffee hasn't yet hit the shelves. US roasters are using existing inventories first. With the lagged effect of tariffs set to kick in, analysts expect the impact to start hitting US coffee retailers in the next quarter. Trump's policies are not just limited to strategic sectors. While bringing additional coffee roasting facilities may not have been an explicit goal, it could be an ultimate caffeine-rich consequence of the current tariff policy. Business Bureau, WION World is One.